If you're watching the Central Florida market, there's reason to be encouraged. 2025 didn't just limp to the finish line, it ended with positive momentum despite a challenging few years. Let's break down what that means for buyers, sellers, and investors alike in Orlando. Welcome to Dre's Take. Year-end data shows that sales were up about 1%, 0.9% to be exact, compared to 2024. That's notable because earlier in the year, sales were lagging. So what changed mid-year? Well, interest rates eased more than 0.5%, insurance premiums finally straightened out, and finally, buyers started responding again. And that's the exact kind of shift we've been waiting for here in Orlando and the broader housing market in general. We started seeing more pending contracts, which is generally an indicator of returning buyer sentiment or buyers returning to the market. In fact, pending home sales actually ended the year up about 2%. And Florida just recorded its 5th straight month of rising pending home sales. That's the longest streak since early in the pandemic of 2020. For Orlando, that means more activity across neighborhoods and various price points, not just luxury and cash buyers. Inventory levels are also stabilizing, approaching more traditional norms, and median price points have flattened as opposed to the catastrophic or astronomical increases we were seeing in the early 2020s. For single-family homes, the statewide median price point was about $414,000, which is only slightly lower year over year. And for condos, it was about $310,000 or so, both of which signals a more balanced market, which is where Orlando buyers get more choice and less pressure. So here's Dre's take. 2025 didn't crash, but it corrected. And that correction brought balance back to the market. Buyers in Orlando are seeing less competition, more inventory to choose from, and pricing that isn't just running away from them. And for sellers, they're still getting solid prices for their homes, but in a healthier, more predictable market. That's the kind of shift that feels good for consumers, whether you're looking to downsize or upsize, or just enter the market for the first time. So cheers to the momentum for 2026. It certainly appears the worst of the worst as far as the housing market goes has passed us. It's in the rear view, and now we can continue forward with more sure-footedness. You're not in a bubble. You're in a balanced, opportunity-rich market. And until next week, that's Dre's Take. All right, y'all. Take care.